level sheet. Hang on, let me show
Yeah,
you that. I'm kind of team viewered into the office, but
I get
here's
that.
the
Yeah,
here's okay. I'll keep it simple for you. I'll leave it in here.
that's good.
And so you can see here, the 2060 is just this big area. Where does this number come from? Just so that you can have, you can create your own ideas. It's this thick black line. It's this big balance zone that we've had for a long time, and we've tested it from below at 61. We've tested it again at 59 and a quarter, lower high, and then we've sold off with the bottom of this at 81 and a quarter, double bottom. The idea here is that we're still nowhere. Like we have not explored anything new since mid-December. We've been recycling this area over and over and over. We're in like a consolidation zone, and we haven't really gone anywhere. So if you look at this on the SPX, which is a chart you love to look at, the cash index, essentially what we have here is since December, we've dropped, we've popped, put in a double top, we've pulled back, we pushed higher, we put in a lower low, multiple bottoms here, a double bottom, pushed back up to that equivalent of the 260 level, and we've almost come down to this double bottom. And this is exciting, this double bottom, because it's essentially showing me that the buyers are just not doing a good job holding on to the higher levels, which doesn't mean that sellers can take over necessarily, because the overall trend, as you can see from this trend line, the overall trend is, the long-term trend is clearly upwards, and it hasn't been violated much. Even through the October volatility, we kind of poked through and came back up. But short term, or over the next week or so, this is telling me that there's a high probability of finally getting down to a level where we can get some real buyers, which is around 1956.75. So I'm going to bring you back to this chart, and that's the key level I want to add to the list here, and you'll get an update on Monday. This level here, 1956.75, is the next key area to test. And the next acceptance area, you can see the bulge that's coming out here on the composite, and a break below 1980, which was the very next intermediate level, 1980, right here, this pink line. Beyond that, we're looking at this 56 area right here, and then we have a cluster of confluence at 52.75, 50, and 48.50. So those are the next key areas. So in sequence, we did have this 87.50, which I didn't list. We went to 87.75. We have 1980 below that. I'll type these in the room so you have them. Don't worry about it right now. And then from there, we're basically going to earmark this 56.50, and then it brings us into this multiple confluence zone for buyers. And I think this is going to be pretty decent support, at least for a bounce back into the 82, possibly 95 level, which you already have. If it decides to continue lower from there, hallelujah, I welcome the volatility. But for now, the market overall hasn't accomplished too much. Even if it takes out this double top on the SPX, it's really got a lot to work through to really become a sell market. Now you look at yesterday on this big sell-off day. It was about 50 points of range yesterday. The 52-week highs on New York Stock Exchange actually kind of perked up. They actually made a higher high on the 52-week highs. The 52-week lows did come up, but the 52-week highs normally would drop just like they're doing today. The market's basically sideways in equities, as we can see from this. This is an index chart that I use to show the underlying markets. Oh, I don't know why I can't control this chart. That's odd. So I brought this over and I can't control it. Let's see. Here we go. Okay. So what this is it's a chart that resets at the open, at the equities open, at the Wall Street open, and it shows me what everything is doing from that 0% line. Essentially what this is showing is that the Europeans are leading this push up, the Euro stocks, DAX, and then we have the Dow Industrials, the financial spider, sector spider, and then Russell, then Dow, then the discretionary, consumer discretionary, and so on. It just helps me see what's going on. I've got the Bund, the Euro, the 10 years, the bonds, and then you can see gold and crude oil are down 1.5% and 1% since the cash open. It gives me an idea of which sectors are in control, and it plays along with this little chart here. So this here, these five sectors represent the a majority of what's in the S&P 500, and I like to keep track of those conditions. Other people use things like Apple, tracking the Apple chart to kind of see what's driving things for the NQ and for the ES and stuff. So overall, I think the market is even though it's sold off, it was really a controlled sell-off. Further evidence to that, and I covered this in this morning's Trader Bite. Yesterday, this is the S&P 500 net issues. This is basically the total number of stocks that are positive minus the total number of stocks that are negative. Okay, so these are the advanced decliners in a net format, subtracted from each other. On yesterday's sell-off, we opened up higher than zero. We broke lower. We came back up just like we did in the S&P 500 in the futures, and then you had the Fed come in right here, and then it sold off. But it sold off, even though it sold off quite a bit, the S&P depth or breadth was higher than it was the prior day. It didn't even breach the levels it put in the prior day, which is this green line here carried over from here. So to me, when I came in this morning with everybody, screaming bloody murder or whatever, that the market's going to fall apart, I'm like, if you're being an objective trader or investor, there's just evidence that really this has not gone anywhere. And I just want to make sure everybody saw this chart here to see that we have sold off a lot on high range in the past, but all we've done is come back up the next day. So you look at these days here, a wide-ranging day here, 50 points, 51 points, and the next day just pushes back in. And this is kind of the same. It's more of the same. And this is what we call balance. This is typical behavior for balance, except that this time we have multiple bottoms. This is a weak low. So my expectation, I think the higher probability is over the next day, 2, 3, or whatever, I expect it to start making its way down to 56.50 or 56.75 before it takes out the all-time high. Nice. That may be a complicated way to look at things, but different people trade in different time frames, and in my analysis, I'm kind of looking at all time frames that affect my trading, which is the couple-day swing guy, the person who's trading for multiple hours, and then the day trader who's looking for to spin for ticks or a couple points. And then when I go to put on a trade, I'm assessing who am I trading with here to decide where my targets are going to be, and if I should take a fade, a drop, and take a bounce, or if I should take the bounce for the sell-off that's still coming because the higher time frame is in control and is not done. And that's different than how most people trade, but if you're in the pit, ultimately the feedback that you hear in the S&P pit through day trading radio in the room, that's what they're counting. That's what those guys in the pit are kind of getting visually. Is who's controlling the auction at the moment, and I'm doing it kind of electronically.
Right. I got a couple questions just based on your analysis there, and I think this is something we haven't hit on in a while, and I think people will probably benefit from it a lot. You look at your chart in your time frame. We would talk about different time frames. When you bring your levels to day trading radio, you're basing these? I know you when you put the chart out there, you have weekly levels, you have daily levels. Are you looking at a daily level? And I know volume profile, you could use this on every time frame. What's the time frames? What's the instances you use it in intraday? Do you combine your intraday analysis with your daily analysis?
Yes. Yeah, that's a great question. Now, you said it. You said a really important thing, and that is with volume profiling, it doesn't matter what day it is. So the volume at this price on the daily chart, whatever volume this is, whatever this price is that's caused this peak here, will show up on a 15-minute, on a tick chart, on a 1-minute. It doesn't make a difference because it's just accumulating the volume that is traded at that price. It's time agnostic, so to speak, to use volume profiling, and that's why it's something you can layer on top of, the tradeometer and trend lines and fibs and stochastics, and it's something you can layer on without it affecting the overall picture. It's kind of like it's an additional ingredient. It's not the steak itself. It's just a little bit more sauce to enhance it, so to speak. So to answer your question, for my analysis, when I'm coming on Day Trading Radio on Mondays, I look at weekly profiles. This gives me the big picture, and the weekly profiles essentially show me where the market has accepted things. Anytime you have a bulge like this, we call it a high volume node or a point of control. The point of control is in red. That's where on the chart I say expect chop. So here you'll see those are the green levels. It's a chop target, because those are highly accepted areas, and the market's likely to invite the opposite side to interact and start to kind of resist continuation of the move. So I'm looking at weekly levels. What did we do this week? Do we have a double top? Like we had a double top week ending 23rd and week ending 9th. I point those out. Again, that's the 2060 level in conjunction with the fact that this is the highest volume price for weeks on end since October, mid-October. So I pull these levels first, and then I drill down to the composite to look at the daily and see, okay, what's happened recently? What's the more fresh information? And then once I do that, I switch this chart into a 60-minute, and I'm looking at, okay, what about the last couple of days as opposed to weeks and weeks? And then I distill it down to, okay, these are the boundaries for the week. These are the boundaries for the next couple of days. DTR, I'm looking at DTR stuff on a weekly basis. So that's the time frame that's the range I need to cover. And that's why I provide you with the range at the bottom of the chart. I look at this chart here that tells me, it shows me where the big, this looks like somebody's bleeding on my screen, but it's really showing me where the peak volume has occurred. So now 2028 is a huge area now. You can see how the volume peaks out. Again, 2060 up here, and then we're stuck in this lower zone. So right now we're playing 2013 down to 2081. That's the zone we're in, and we're stuck in this zone. Do I expect this to speed up into 2028 today? Probably not. I think we might tackle 2011 today at some point, but we've basically transitioned, and that's what the market does. It goes to an area, plays around in there. That's where you get your volume. Then it kind of rejects it, moves very quickly like we did yesterday. It's rejected this area, played around here. You can see these bars if I expand it. Played around, and we rejected, came down to the extreme of the next area, and now we're testing the high volume prices of that area, and we're stuck here in this zone. I think we continue to go up, and the target upwards for me is now 2011.50 for today. But if we break through that 2013 again, then things change. Once again things change, and we start to target 2028. So it sounds like I'm throwing a lot of levels out there, but it's kind of like an if-then thing, like a computerized, well, if this happens, this was likely to happen. If that happens, this is likely to happen. I don't know what's going to happen, but I know that if it breaches certain areas or the quality of the trading that happens at certain areas, if it starts to go in a certain direction, I know that it's likely to continue until it gets to the next key area. I don't know. I might have confused people with that.
We'll kind of finish it on the note here. I'm going to bring up my chart right here just to see, because it was hard.
Sure.
We're seeing the market here at 2006. So give us two levels to watch today just to kind of close out things. We're talking about maybe a target of 2011. You think we actually get up to 2011 before what? And if we break down through what are we going to get to? Let's
okay. So right now, one of the levels you have is 2005.
Yep.
And this is where we're stuck right now. We're kind of really tangled up here.
Yep.
A break above 2008 is likely to give us 2011.50, and I expect a lid to come in on that. I expect sellers to really step in and kind of stop that from moving forward to maintain control on the sell side. So the next level up you have to watch is 2011.50.
All right.
Okay, and if it breaks 2011.50, then you're looking for a run to 2023. Probably not today because it's a lot of range for one day for this product. But 2011.50 is the area. This is the kind of over-underline for today. Below us, Below us, if we breach 95 again, which is the lowest level I gave you, 95. If we get below 95, that means we've breached the midpoint of the day. Then I'm looking for 1980 as a target before the end of the day. Those are the two key, up down kind of plays that are standing right now.
Awesome.
All right.
I appreciate you coming on, FT. Always great working with you, and we look forward to hearing from you on Monday. And don't forget, FT71 can always be reached at Stage 5 Trading, stage5trading.com. Any way you want to spell it, you can get there. Very easy to find.
Very cool. Thanks a lot, man.
All right. Thank you.
Good luck, everyone. Take care.
Bye. All right. Promise you to get him on today. We got him on. Appreciate that. Good stuff here. Market here pushing back up here, though. And I hope the levels were good for you. I know it's always difficult with the levels here. Volume levels, we deal with a lot of things, and we only have two hands. So try to adjust the levels as we go through. We get the other things up and running. Oh, yeah. Oh, yeah. All right, so let me close out this. I'd like to record his sessions and then send them out to members later. So we'll try to get this out to you in a bit. Let me just stop this right now. DayTraderRadio.com.